Hey guys, I'm John Fryer. Welcome to Fryer Funds, welcome to my kitchen, and welcome to the Fryer Feast series. In this series, we took $15,000, we're investing it into individual companies, with all investment decisions made over the weekend to be executed on Monday. This is for people who work 9 to 5, who don't have time to trade during the week or make decisions during the week, so we focus on the weekend execution and go from there. Now, I want to point out, this is not financial advice, this is not legal advice, consult your own advisors, and make your own decisions. But with that said, let's dive in, see what happened this week, and where we're going from here.
Welcome to the last week in May. Now, we started this back on April 20th, so it's only been a month, but the S&P 500 is already up 6.6%, but meanwhile the Fryer Feast is up about 11.7%, and we weren't even fully invested. Now remember, we've got 30%, about 5,000, actually it's about 4,600 now, in cash on the side. So not fully invested, we still beat the S&P 500 as if we were fully invested. But that doesn't mean it's all roses. So 11 of the stocks were down, the biggest one being Roku. We bought that at the wrong time. It's come crashing down. We may end up averaging down into it, but it is kind of expensive for our portfolio, so I'm still waiting on a larger drop to buy more of that. But the rest of these are just down a little bit, not a big deal. I still see them all coming up, so we're not going to do anything with them, but they are down. There are 16 stocks that haven't done better than the S&P 500, but are still technically up. Now, the biggest surprise on here for me is Activision and Microsoft. Gaming was supposed to be a huge thing, a lot of upward momentum, and unfortunately we missed a lot of the move. So Activision's only up about 7%, and Microsoft's only about 4%, and that one really surprises me. The rest of these aren't a huge surprise. It does kind of suck they haven't gone up higher, but they're all right. But there were a lot of stocks that we did get a big movement on that's really helped us. So there's 21 that got 25% or more, but 4 of them actually had 50%. Twilio, Sonic Automotive, LivePerson, and SeaWorld. Now, of these, Sonic Automotive, we've already sold some. Snap, we've sold some. I don't think we've sold any others. I am looking at possibly selling out of Lowe's and Home Depot, although it's not on this list because it didn't grow quite as much. I think it was like 22%. But the home improvement sector, yes, it's got upside. However, not very much upside anymore. It's kind of outpaced itself a little bit. Not too much, so I'm not ready to sell yet, but we are looking at that. And then towards the end of summer, we'll see where it's at. We may end up buying in more if it drops between now and then, but if it runs up really well before earnings, we'll probably end up dropping out because although I expect it to be better than a lot of seasons, it can't be that much better, and it's already higher than it was last year. So Lowe's and Home Depot will probably end up pulling out of those ones here pretty soon. But in the freezer or the pantry, the other ones we were looking at, we missed big moves on these guys. 10 of them: Wix, Sportsman's Warehouse, QDell, MongoDB, Stitch Fix, DocuSign, Square, Okta, Logitech, and Etsy. Now, of these, Wix was kind of the biggest surprise with Shopify. I also didn't think Shopify would grow. It didn't grow more than 25%, so it's not on this list. But these are the ones we missed, which isn't too bad. There was a lot more that we actually lucked out on, like Netflix. Everyone was talking about Netflix. I knew it was a little too late. It had already gone up. So sure enough, it's down. We actually are looking at buying that here soon, but not quite yet. But going forward, it is about time to kind of rebalance things as things shift, our environment shifts. So a couple of things to keep in mind as we do research this week for next weekend. Next weekend, we should expect a lot of trades for next Monday. The restrictions are starting to slowly being lifted, so that changes the environment. But even with those restrictions being lifted, a lot of people that I've talked to and that I've seen, that I've heard, are still going to work from home for quite a while, for several months, if not till all the way to the end of the year into next year. So that's still going to be a big factor in the economy. Online shopping will have staying power because a lot of people are going to do more online shopping. However, as restrictions lift, people become less worried, want to get out of the house. I do see online shopping having a little bit of a slight deceleration. So it's still going to be strong, just not as much growth as it has been over the last few months with the shutdown. Of course, it's summer, but we are expecting overall fewer vacations and flights, but there should be a huge surge of demand as things lift up. So airlines should start popping up here soon. They have a little bit, but not very much yet. vacation stocks, things like that. Now, Hertz Rental Company filed for bankruptcy recently. Now, that is a huge sign that automotive is going to suffer because rental cars account for a large portion of sales for the big manufacturers like Ford and GM. So we want to look at changing our automotive investments. Right now we're only holding Ford and Sonic Automotive, which will be changing here at the end. I'll show you that. But that's something to really research this week is automotive and what's going to happen there and make different investment choices off that. Along more COVID-19 stuff, it is possible that there will be extra social changes for the foreseeable future, such as masks at Costco. I know some restaurants and movie theaters, although as they open, they have different rules and spacing issues. So these social changes that are longer term could make a big impact on some companies. But if we get a vaccine or a cure, then everything's just going to take off, especially all the recovery stocks like the cruises and airlines and things like that. But there's more than just that going on. There's also the presidential election coming up, which is tied into all the protesting going on. That's going to have an impact because if Trump ends up getting voted out or someone else gets voted in, however you want to look at it, then that'll very much change the economy going forward and what we'll end up investing in because Biden, who's the main other competitor to Trump right now, is likely going to change things a lot differently than Trump will going forward. Things continue to escalate and tensions rising with China and even here in the US now with the protests, so cybersecurity is going to be even more important. Recently, a lot of the cybersecurity companies have skyrocketed. I think FireEye is the only one right now that hasn't that I'm looking at, but everyone else is kind of overrun. We do own Palo Alto Network, so that we caught that, but cybersecurity is going to be important going forward. And then a little further out looking, there's going to be a big baby boom late in this year, early next year with everything shut down. You can imagine why. So I'm looking at that, something like Procter & Gamble and J&J, both of which we have, but I want to do more research and find where are some laggards that will grow drastically when there's the big baby boom next year. Maybe hospitals, maybe some clothing brand that does a lot of baby sales. We'll see. So that's kind of what we're looking at going forward and where we want to rebalance and research into redoing the entire portfolio. But considerations, so research automotive in particular, that's the one I really want to get into with Hertz's recent file for bankruptcy. And then find some more laggards. There's pent-up demand for a lot of things, and there's definitely stocks that have lagged behind. So we want to grab those if we can find them, kind of like LivePerson. That was a laggard. They reported earnings, jumped up. We took advantage of that because we knew that was coming. So we want to find more of those. But actions for Monday, if the stock market is down or at least doesn't go up too much, I do want to start getting into the movie theater stocks because they're going to start opening here soon. I'm expecting investors to start to flock to them as they open. So as long as they don't jump up significantly tomorrow, like more than 10%, I want to start buying IMAX and AMC. Now AMC's also, there's talks about Amazon buying them, and if that talk comes around again, AMC will jump up, and then we'll sell as soon as it jumps. But we're going to buy a little bit of IMAX, a little bit of AMC, and then we're going to go ahead and sell out of Sonic Automotive. Like I said, they've outran their price target from last year. I know used automotive is going to probably do well, but I don't know if it's going to do that well. And with the bankruptcy with rental car companies, that's going to drive the prices of cars down. So I want to pull out of Sonic Automotive at least until I do some research and see if we want to get back into them as they drop more. They are still higher than the last few times we've sold out a couple, but we're going to go ahead and close our position here. And if it goes up a little and we miss it, that's okay. We can put that capital to work elsewhere next week or into these two. So we'll still have plenty of sideline cash. We can start researching and buying, probably end up putting a lot more to work this next go around, but that's where we're at. So thanks for watching. Again, if you want to follow along or, this is not financial advice, this is not legal advice, consult your own advisors, make your own decisions. But if you want to see the entire portfolio, the link for the spreadsheet is down in the description. Go ahead and grab that, take a look, and use the percentages if you're not investing the same 15,000 that we started with, or now we're up to 17 and change. I forget the exact number. But yeah, that's all I've got for you today, and we'll see you next time.